Hello traders, this is Blake Morrow and you are listening to the Daily Roundup webinar. Just a real quick reminder, this will be the last Daily Roundup webinar of the week. The online trader summit is happening tomorrow, so it's obviously going on right now through the it'll be going on right now through the times that we normally do the Roundup webinar. So I just want to remind you, if you haven't registered, make sure you do so. Because the normal links that you use to access the face webinar, the daily roundup, those won't work. You'll have a separate link for this specific online traders summit. So and I know I'm sure you're sick of hearing me talk about it, but man, we got this is a great group of people to listen to tomorrow. So tomorrow and Thursday. So enjoy it. I hope you thrive with it, and let's talk about the markets a little bit. Okay, so before I get in the dollar yen, most of you guys listening in know I've been on the phone a lot today. Between that and just kind of doing some things, getting ready, my PowerPoint ready, and everything else, I haven't done a lot of trading. But a few different things. But I just put out a short, or just put on a short rather, of the U.S. dollar Japanese yen as it rallied back to the previous support at 107. And this is one of those that technically it makes a lot of sense. But let me also explain to you, correlation-wise, it isn't. The dollar yen is not moving the way you would expect it to, or the way it's moved in the past, right? Meaning, you know, stocks today were up, dollar yen went down. Okay, you know, dollar just basically was under pressure as stocks went up. Stocks came down today. You can see the S&Ps come off, which I'll talk about here in a moment. S&Ps have come off, but the dollar yen bounced back. So if you're looking at the dollar yen or any of these other yen pairs to act like they have been in the past, correlated to risk, meaning as stocks go up, yen gets weaker, or stocks go down, yen gets stronger, that type of relationship, we're not seeing it. Now, technically, it's doing what it should do, right? I mean, it broke down, came back, retested hourly, about a 50% retracement. Okay, 50% retracement, and it's technically doing what it's supposed to do. The key to that is, or the question I have from here is, will it stay correlated or uncorrelated with risk appetite? And that brings me to the S&P. So so I'm sorry, I just was focused on something else for just a moment. Not that I was dismissing you guys. So look at if the S&P, let's talk about it for a moment, because this is rather important. We broke resistance. Yesterday afternoon, I was talking to one of the guys in our chat room, and I said, yeah, it looks like we're going to 29.30, which is obviously the long-term 618 retracement. We were chatting around this morning about that, big resistance coming into play. And the fact of the matter is, it is really big resistance. Everybody's looking at that 618. So we challenged the underside of that trend line, sorry, let me back up for a second. We came really close to the 618, but we're failing to hit it, which isn't surprising because everybody's looking at the 618. And when everybody's staring at something and waiting for something, you end up undershooting it a lot. That's just, what I've learned, right? But what also happened is we came and we challenged the underside of this trend line. So in the event, and this is where it gets kind of questionable for bulls here. In the event the S&P closes, let me get a different color here, below like these levels, somewhere around here, like let's call it 2840, 2850, okay? We close below those levels, I'm gonna be a little nervous buying risk anymore because I've been, you know, I actually played the pound twice today. I did it once earlier while I was on the phone, and I sold it at 125. And if you guys don't know why, here's the update from ForexAnalytix. Intraday update. The 125.10 level is the 618 retracement, which may offer near-term resistance for the pair, and also the figure at the 125 level is horizontal resistance as well. Right. So we were hitting that. We were at 124.99. I was on the phone. I sold some. I covered it at like 50. It was a really small position. It was nothing to really write home about, but it dropped to like 50. I closed it somewhere down here after shorting it up here. We had a nice little head and shoulder pattern. This is while I was on the phone. Yeah, a little head and shoulder pattern. I guess I was trying to draw it, but you guys get my drift. Anyway, I closed it down here and then it continued to drift lower. I actually bought the down here at like the 40, like 44. I sold it at 49 really quick, in and out, because stocks were bouncing at that moment. And so the reason why I'm telling you this is because if stocks bounce, I can play dollar weakness. You know, I can buy the cable, buy the euro, buy the Aussie, whatever. But if the stock market actually reverses and we, you know, get below like this 2450 level, I don't want to be selling dollars anymore. Okay. That's, you know, why I'm watching the S&P so closely. And if you look at, this is let's see if I can zoom in a little bit. This is the daily candle, right? Right now it's a doji, you know, but if we close with a red candle, looks like this. I'm going to try to make it look like this. Hold on. Just give me 1 second. Line. Okay. So let's say it closes like this, right? And that means we close at the lows, right? I'm trying to illustrate this for you. I'm not doing too good of a job. Long wick, red body. What is that? Well, that would be a shooting star, pin bar, whatever you want to call it. It should yield us some lower levels. Then you got a false breakout, all sorts of things. So the reason why I'm telling you guys all this is because by the end of the day, you know, by the end of the day, this is trying to get back to my normal mouse. Okay, here we go. So by the end of the day, if we close on the lows in the equity markets, you know, close on the lows of the day, I'm going to be scouting basically dollar longs from then on out. That means I'm going to be looking to sell the euro. And by the way, if you guys didn't see it, the euro really failed here at this downtrend line and at the 618 retracement. It really did fail up here, and I think a lot of people are getting kind of bullish with this. You know, there's an inverted head and shoulder pattern. It's still not invalidated. It still can play out, but this has more to do with if stocks go up or down, right? So if stocks move higher, the euro will firm up again. If stocks move lower, this will get invalidated, and we're gonna head back below 108. So again, what I'm gonna be doing tomorrow is really more predicated on what happens today at the close. And right now, you know, at this moment in time, I can't make that call because I don't know where we're going to be. Although I would say if I did own risk or I was long stocks, I'd be kind of nervous right now. That would be my overall arching feeling at the moment. I sold some Dow futures earlier, but not big enough to write home about. But I really would think about reestablishing a short, you know, S&P trade if we end up closing at the lows. And you know, again, I'll just reiterate: underside of trend line, close to the 618, failed breakout attempt. You know, reversal candle if we get it. So by the end of the day, if it's a red candle, then it's going to be a little bit of it's going to be a little bearish. All right. Yeah. So guys, have a great one. I will talk to you tomorrow morning on the FACE webinar. But remember, the FACE webinar is morphed into the Online Traders Summit. So make sure you guys have registered and you have your link. Use your correct email. You need it. You can't get in without it. So have a great one. I'll talk to you soon.